Hello, everyone. This is Ryan Mallory for SharePlanner.com. Today is May 6, 2015, doing a Google Hangout with you guys, and a market that is, at least over the last 2 days, is becoming ever increasingly more bearish. The selling has been perpetual. It's been steady. It hasn't been like panicky per se, but it has been steady and determined, I guess would probably be the best word. Look at the 30-minute chart here on the S&P. A lot of red bars. You go back to yesterday, about, well, yesterday since the open, very few green bars on the 30-minute chart here. You have 1, 2, 3, 4, 5. Not a lot. I mean, pretty much the selling has been perpetual. And the fact that we're getting two pretty solid sell-offs back to back is a lot more than what we've seen in a while. I mean, we had 2 days of selling here, but they weren't of the same steepness and duration as what we saw today and yesterday, where you might be hearing some rain in the background here. We're starting to get a thunderstorm in Florida. Once we start getting towards the summertime, it starts raining like cats and dogs. So apologize if it messes up the video at all. But nonetheless, back to the S&P 500. We're breaking through the 50-day moving average. We did that yesterday. We're following through on it today. There's not a lot of support nearby. The closest support level is this level here coming off of the March lows, where there was about 3 tests of it, and then another possible test here in the very near term would be around 2059, 2060, basically right where the market started the year off at. So if we go all the way down there, the market's break even for the year. And for the case of the Dow will be in the red, and some of the other indices will be as well. So the other thing too, and I didn't quite finish this thought on the 2 days of selling that we've seen, the fact that we sold off this hard yesterday. A lot of times when we get that kind of selling, we'll see a bounce towards the end of the day, or at least this has been the characteristics of the market recently. You'll see a bounce towards the end of the day, where there's some buyers starting to load up, and then a heavy bounce the following day, where it basically squeezes the life out of the bears. Now, you got that on the previous sell-off, which happened on Thursday of last week, and then the huge bounce there. And then you got it again on the 17th of April. You got the bounce towards the end of the day, which inspired the bulls a little bit there. And then the following day, it just really took off, and then, marched to new highs. So the difference here between those two sell-offs, obviously, is we're not bouncing today. We're selling off, and we're selling off with pretty much the same intensity as we saw yesterday. And the day it still has a little less than 2 hours to go in the trading session. So we could break through that 2070 level, maybe break down another 1% on the day. Now, from a personal standpoint, I'm not getting overly short on this market. One, I'm not a fool to what we have seen over the last 6 years, where the market has been rallying, and when we get these sell-offs, they're quickly bought by the dip buyers, and the market shoots up to new highs again. So that has been a common theme throughout this market rally over the since the March 2009 bottom. So you can't go full tilt saying, hey, I'm going to get 100% short on this market, man, and Armageddon's coming our way, flash crash 2.0. You can't get caught up in that kind of stuff, because that will burn you, and it'll force you to ultimately, get squeezed out of your position. So what I have right now is SDS. Got into that. Members of the splash zone got into it at 2046 yesterday, and so far it's doing really good. There's about 3%, or roughly close to 3% in gains, and 2 solid days of performance. I put my stop loss, well below the recent lows of SDS, so 2009. So the position looks really good. However, knowing what we know about the market and its desire to often bounce after a period of selling, I got to, ask myself, do I really want to hold this another night? Do I want to be 20% short, or do I want to be 10% short, or, completely flat going into the evening? Another position to consider that we got into today, and it really hasn't done much yet, basically flat on this trade so far, is OMC, and great look to it. It's got a nice level of support that it's breaking through. It's broken through it once before bouncing back up. So this is its second attempt to hold this broken support level, and see if this heavy distribution pattern on top can lead to a move, perhaps down to like 72, if not all the way down to perhaps the 70s, where it has this little gap right here to fill. Once again, most of my trades I'm looking for, and I'm talking about short setups here, I'm pretty quick to take the profits. So, the ideal short position is one that I can consistently yield 3 to 7% in gains. So if I have them, oftentimes I'll end up, taking it within that frame. So let's look at a few other things too. The Russell is by far the ugliest index of them all right now. Of course, you had this long, period of consolidation that took place for all of 2014 pretty much. And then it broke out this year, and really one of the few indices that has had any kind of a trend to it, quite honestly. But now that trend line's broken. You look off of this October lows here, it held that trend line perfectly, for a long time. And then last week clearly broke it. So this one doesn't show any kind of remorse at all. I mean, it's selling, and it's selling off, pretty good and pretty rapidly. So this is the one index out of all the indices that looks absolutely dreadful. The other one worth looking at here is the Nasdaq. And again, you got basically what looks like a head and shoulders pattern right here. You got the left shoulder right there, then you got the head, and then you got the right shoulder here, and it's confirmed. I mean, that's a straight up confirmation of that short-term head and shoulders pattern. And short-term targets I would look for on the Nasdaq, 48, 43 or so. So that's another, a little more than 1% away. And back to the S&P 500, and I wanted to do this earlier. Take away this trend line, and you got a similar, type of chart pattern here. Not quite a head and shoulders like the Nasdaq was sporting, because the right shoulder goes way up there, but you can see there's some support being violated there today that we hadn't violated yet until today. I mean, this is a fresh support level being broken. So like I said, the 2059 level seems like a logical place for it to go to in the short term, and that would probably be a good place as well to tighten up your stops, or get out of your short positions as well. Now let's look at gold. And the reason why I want to bring up gold and silver, gold, GLD, there's really nothing there that I can see from a chart standpoint that says buy me. I don't even see anything there, quite honestly, that says short me either. I mean, this is a messed up chart. There's nothing there to really get behind. I mean, there's a clear support level down here going back to last year's November lows, but that's neither here nor now. So really at this point, I'd stay away from some of these commodities like SLV. Same thing, just chop, 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 chop. There's nothing there really to trade. Take the gold miners, however, which is sort of interesting. I mean, you got this nice little trend line that's rising up. You could look at this two ways. That's a massive bear flag, or it's just a trend line that's threatening to be broken. Actually, it's broken already. It broke today. So GDX breaking a trend line off of that March lows there might be something worth considering as a short as well. I'm not really, a little bit more volatility than I'm willing to take on from a swing trading standpoint. But for those who like to live life on the edge a little bit, that might be a good short setup for you. USO. There's no denying the fact on USO that we're pretty much breaking out here on the daily chart. The only thing is with the last 2 days, yeah, it's gapped up. It's breaking away from the recent trading zone that it has been in. However, USO is gapping up, but it's not holding any of those gains throughout the course of the trading day. So it's basically like a gap and crap scenario each day, except it's just not completely crapping out on you. So I'd be definitely careful with that, especially with some of the weakness that we're seeing in oil. I mean, you look at Exxon, I mean, it had a pretty good reaction to earnings, but since then it's selling off. Take CVX. This was one I really liked going into this week. I mean, that chart is just getting decimated. SLB is another one. It's consolidating, so it's not getting hit too bad. But you look at a lot of these oil names out there, it is they're getting sold off pretty hard these days. Let's look at some trade setups here. I'm gonna go over some shorts, and I'm going to go over some longs because the market's really day to day right now. I mean, we could easily bounce, we could easily keep on selling, so it's good to have some powder dry for each scenario. But you take Texas Instruments here, semiconductor, definite break in support right there. It's broken 54, now it's 53.47. I think you can get long here at any time, or short here at any time. And probably put a stop loss around 55.11 or so, and play it that way there. But I mean, it's got the moving averages above it. It's breaking below this clear support level, and really solid short setup there. SWFT, not quite breaking down on the day yet, but you got a massive double top place and clear support that's already broken, and now it's got this, like, I don't know if I want to call it a bear flag or not, but definitely a pretty good setup there. If it can break below that 2410 area, the selling should definitely pick up some on SWFT. JAH, huge level of distribution there. If it breaks below, I'd say if it can break below 50.75, this becomes an automatic short, depending on your desire to add more shorts to the portfolio. I guess for like me right now, I'm 20% short. So as it stands for today, I'm not looking to add another short position to my portfolio. But if I was looking for it, if I was looking to go 30% short on this market day, I would probably add JAH as soon as it broke 50.75. And then you got some of these retailers here, home improvement stores. Home Depot has been looking bearish for quite some time, even while the market was hitting new all-time highs. This thing was, breaking through distribution, and you can put your stop right above this May 4th highs here, and then get short at the current price level at around 108. And once the selling resumes on this stock, a push below 106, basically below Thursday's lows from last week, so a push below 106.62 would be ideal. And then you got pretty much a similar setup with Lowe's company. More distribution on top, tried to bounce. It doesn't look like that bounce is going to hold. It bounces near resistance, but not quite. So I think this one's going to head back down lower as well. And then you got Autodesk. And this was one of my favorite shorts coming into today. Ideally, if you could have got in around 56.21, that would have been your place to get in. But I still think it's a good short setup. You can put your stop with an entry at around 56. You can put a stop loss at around 58.19. That gives you about 4% or give or take some there, about 4% for a stop loss. But yeah, another double top play here. Looks good, confirming below the 200-day moving average even. So now for some long setups, CFX. And the long setups, especially after yesterday, man, my watch list for bullish trade setups was decimated. Not a lot to speak of there. So the good setups are really, hard to find out there right now. But CFX is one of them. It's not worth trading into right now, especially not with the market still sitting at lows of the day here. Currently, as we're speaking, S&P's down about 0.75% or 15 points. CFX holding up pretty good. I mean, down only 0.4%, not down that much yesterday either, though it was a pretty volatile session for it. It didn't really succumb to the selling pressures. So you got this clear support level, and if you back out a little bit, you can see that there is a inverse head and shoulders pattern in there, and it's confirmed the inverse head and shoulders pattern. So now it's consolidating above that IHS pattern, and if it can get back above 50 bucks or so, that one's going to be a good trade. I really think it will. So it would be exciting to see what CFX can do on a day where the market is rallying. CIE, Another one, once again, not worth getting into right now, because the chart's not quite there yet, but it's something that you want to watch in the coming days because a move above 1088 would be ideal. GT, another one, light pullback here, but it's got a nice trend line actually in place. It hasn't violated that trend line. The pullback's been pretty orderly there, back to that trend line, and I think there's a good chance that GT is going to bounce here. The only thing you got to watch out for is the resistance here at, if you back out pretty far here, there's a massive inverse head and shoulders pattern that's yet to confirm. But if it can break through that, this GT trade setup is mint. I mean, it's a really good opportunity. LRE, double bottom, nice consolidation. It's definitely taking a hit today. This is much more volatile stock. I usually don't even trade stocks that are under $8, but this one popped up on the radar, so I said, what the heck, let's throw it out there and let people decide what they want to do with it. But LRE, nice consolidation there. It's going to be a wild ride if you choose to trade this one, but you can see that there is some clear resistance overhead that if it can get past it, get above 875, 880, this one might be off to the races as well, especially if USO can continue to break out higher. MA, MasterCard, this is actually part of the Share Planner investment portfolios, doing well so far for members of that service. Nice consolidation, but needs to, ultimately, before you can get long on it, needs to get above 91.80 or so. NE, long-term downward trend line going all the way back to November of last year, but it's been very loyal to that trend line. It's constantly been drawn back to it, only to be rejected each time it tries to break through it. We're seeing that unfold again today. However, in the coming days, if the market does rally, let's say a move above $18, that would be a good point to get long on NE. So that's going to do it for today. If you have any questions, feel free to email me, or just ryan@shareplanner.com. I'd love to hear from you. If you have any questions, you can also hit me up in the Share Planner Splash Zone, where members congregate each and every day to trade together, win together, and even learn together. So, excuse me. But feel free to try out the Share Planner Splash Zone. It's a free 7-day trial, and you can check it out on shareplanner.com/splash zone. Once again, if you have any questions, email me, and I'll get right back to you. Thank you all, and have a great evening, and God bless.